Hello and welcome to today's daily market update brought to you by Forex.Academy. So in this brief webinar, we'll be taking a look at what is currently moving in the markets. So if we can start, as we always do, with our disclaimer, please make sure that you are familiar with the risks involved in trading the financial markets. Please do feel free to pause this particular recording and it'll give you an opportunity to go through our disclaimer. Okay, so the focus of this market update is titled Global Equity Indices Are Pushing Higher again. So let's get straight into the charts and we'll explain exactly what we mean by that phrase. So let's bring up our charting software and we'll start by just looking at the S&P 500. So we have a level of resistance at the 2678, as you can see currently up on screen. And yesterday's price action for the majority of the day, and let's have a look at it on a much smaller time frame. You can see our level of support and resistance in here. So you can see yesterday, excuse me, let's take you over to this area over here. We had a really confirmed break. Price started to pull back to previous levels. So what is a level of resistance preventing prices from pushing higher? They then turn into levels of support, and that's exactly what we've seen. So the market broke above the 2678. It's pulled back to the 2678. And as you can see, just this continuous push higher. And we're currently at these highs at the point of recording this webinar. So that's quite interesting. Bearing in mind the backdrop, bearing in mind the coordinated airstrikes against Syria, the impact that would have on the market. What was interesting to observe was the gap pushing to the upside. So initially we got these markets gapped up, which is probably a little bit more on the unusual side for conducting airstrikes in a foreign land, which is obviously an act of war. But what we've seen is the price close for a period of time until the mid-morning yesterday, and we've seen prices steadily move higher and just navigate the 2678 level, as you can currently see on screen. So when we take this information and we look on the daily time frame, we're getting a nice explosive move off what has been a 3-week period of consolidation. So really, I suppose the question to be asked is what is next for the S&P? And you'd have to say, based on today's price action, that we would expect prices to be pushing higher. Now, the next level for this market to move up to with very little in the way of resistance is actually the 2781 or the 2780 level. So as you can see, this market has significant scope to be pushing these prices higher. So that's just a little overview of the S&P. It's a similar story across the other US equities indexes. We're seeing this period of consolidation. We're seeing yesterday and today's price action break above that, look to drive these prices to the upside. And again, you would expect to experience a little bit of resistance around this particular level here, the 25,372. So there's definitely opportunities for this price to squeeze to the upside. And what we're seeing on screen as well, if I bring up my pen, is effectively a double bottom in this market. So we're seeing a low back in January, and we're also seeing an April low as well. So we are getting this what is relatively sideways moving price action. However, we are breaking up, we are breaking down, and we're currently in this sort of middle zone once more. So we would expect this price to push up to the 25,370 level. Always, obviously, be very mindful of your risk management approach. The same situation applies. It's I suppose, marginally cleaner, the Nasdaq, where we had with the S&P and the Dow Jones, they failed to break this high before collapsing. But what we saw in the Nasdaq was the same high. However, we did experience these markets to make new highs, and then we've rolled over to the downside for the second time, and now we begin to push higher once more. So in actual fact, we don't necessarily have, from a technical perspective, have that much resistance up until about the 7,000 level. So again, this could lend itself to an excellent opportunity to squeeze prices higher. And to just contrast with the fortunes of the European indices and the UK FTSE to begin with, the UK 100. So we do have levels of support and resistance in and around this level here. We had a premature bounce off that level. Ideally, you would like the price, the 2,300, sorry, the 7,300 level to hold up. But yesterday we saw a bit of a pullback in this market. But we're seeing what we're seeing across in the US equities now. Again, in the FTSE, we're getting a little bit of positive price action off these recent lows. However, this market does have an interesting decision to make around 7,300 level, and actually a similar story. However, a slightly better picture on the German 30. We do have this level of support, which is around the current price. So if we do get a break of this 12,567 level in the German 30, and I'll zoom out so you can see that level. You can see how prices have behaved around this level previously. So it just has the potential to provide a little bit of resistance, preventing prices higher. However, if we do get that constructive break of that level, we would anticipate prices to be squeezing higher up to the 12,861 level, as you can see currently above. So that's just a little overview of the global indices, bearing in mind the US, the UK and France took coordinated action against the Assad regime in Syria, which you would anticipate for that to impact the relevant global indices adversely, and we've actually seen the opposite price action across the board. Okay, so that just about concludes this daily market update. So thank you very much for joining us, and we do see you next time. Bye for now.